Morning, everyone. Hope everyone had a lovely evening and hopefully no one is panicking due to this decrease. I know that the market cap has gone down by 4.6%. It's now standing at 1.86 trillion. Bitcoin is down by 5%. Ethereum is down by 5%. Basically, the whole market is down, but I don't think it is a reason to panic. It's just there are a lot of bad news in the market at the moment, so the markets will react accordingly. Across the board, we have red, except for some select few cryptocurrencies that have their own reasons to go up. So they have their own token-specific factors that cause them to move opposite to the market. But looking at the top 50, every single coin is down except for two of them. If we have a look at the Bitcoin chart itself, it finally managed to pull down from the $45,000 support level, and then it kept on going down, and it flirted with a new support level, which is now 42,000. And the bears tried to push it down. The bulls got back to try and stabilize the price. The bears yet again tried to push it down, and the bulls tried to fight back. But it got to a point where there were so many red candles and there was so much sell-off going on in the market that this $42,000 support level could no longer be sustained, and the prices kept on falling until it reached the new $40,000 support level, with $42,000 being the new resistance level. For a moment, it looked like the price would continue sliding and go all the way down to 38,000, but luckily that didn't happen because the bulls intervened and some of that dip was bought back up, and we see the price is now stable at around the $40,000 support level. Barring any other bad news, because there is already so much bad news going on that caused this price decrease, I believe that the prices are going to continue trading within this $40,000 to $42,000 band. 40,000 being the support level, 42,000 being the resistance level. But as I said before, the crypto markets are very volatile, they're unpredictable. They tend to be correlated and follow the markets. So stock markets, especially high-tech stocks, and whenever that dips, crypto dips as well. So it's a matter of concurrently looking at the factors that move the crypto market and also the factors that move the stock markets, especially Nasdaq or high-tech stocks. And that will tell us in which direction Bitcoin will move in the next few days. Why Bitcoin, Ether, Dogecoin, and other crypto prices are crashing today? There are legitimate concerns about tighter monetary policy, which is increasing interest rates, and the Federal Reserve Bank slimming its balance sheet. The Federal Reserve Bank said that it would tighten its interest rates or increase it by 0.5 percentage points at upcoming meetings. This is following January's meeting where they said that in future meetings, interest rates would only be increased by 0.25%, and now it's becoming more aggressive by increasing it by 0.5% at a time. Also, in January, they said that they would decrease their balance sheet by 15 billion per month, but now this has gone up to 95 billion per month, and this has sent crypto markets spiraling lower. So a more aggressive stand by the Fed, increasing interest rates more aggressively and slimming down their portfolio or their balance sheet even more aggressively, we're talking in the magnitudes of 7 times, obviously had a negative effect on the crypto markets, because that means that there is less free money in the market to invest in crypto. There is less capital to play around with in riskier assets like crypto. So if there's less money available, people tend to be more careful, and people tend to move their money from crypto, which is higher risk, to blue chip stocks or bonds, which is lower risks. Also, investors are selling cryptocurrencies ahead of the mid-April tax deadline in the United States. And last year we saw the same thing where market players were selling digital assets to make tax-related payments. So at the end of each financial year, people will have tax obligations that they'll have to serve. Maybe they'll have to pay some tax to the government, and they wouldn't want to touch their bank accounts to pay these taxes. So they would rather sell off high-risk assets such as cryptocurrencies in order to get some capital and to pay those taxes. And because there are so many cryptocurrency users in the United States, and usually these are middle to upper income individuals, they usually pay high amounts of taxes. And even if a proportion of that population sell crypto to get cash in order to pay taxes, it creates a big dent in the price because selling pressures cause the price to go down. Also, Bitcoin's tendency to move in sync with assets such as US tech stocks makes the drop less of a surprise after a tough week for American markets. And it's important to remember that its correlation with the Nasdaq 100 index is now back at record levels. Looking at this article, it shows why crypto went down by such a large margin. there were already factors in itself that were causing the crypto to go down independently of the stock market. But now, because the correlation between cryptocurrencies and the stock market is all-time highs, and the stock market has fallen in the last 24 hours, cryptocurrencies fell even further than what they were supposed to. So Wall Street closed sharply lower on Monday as investors started the holiday shortened week in a risk-off mood, as rising bond yields weighed on market-leading growth stocks ahead of crucial inflation data. All three major US stock indexes ended up in negative territory, with tech and tech-adjacent stocks pulling the Nasdaq down 2.2%. Bond yields are now increasing because interest rates are increasing. So because the benchmark rate has gone up, that means that if you hold a bond, you're going to get a higher coupon or a higher return from that bond. So what have people done? They have divested from stocks, which are higher risk, and took that money and invested in bonds, which are lower risks and are offering higher return than before. And because of the geopolitical situation and the fact that the Fed is tightening its monetary policy, people tend to divest from higher risk assets such as tech stocks, which have gone down 2.2%, into bonds, which are lower risk. And the fact that Nasdaq was down 2.2% and crypto was down by 4.5% is a clear indication that this is a compounding effect on crypto. Because it is a riskier asset, crypto tends to feel the brunt of any negative news more strongly. There's a second reason why stocks went down, is that the recession economic slowdown sell-off that affects energy and various material names. So if there's a recession or economic slowdown, which is happening in the world due to increasing interest rates everywhere to control inflation, sell-off affects mainly energy, and that's why the oil prices have gone down. And today you're seeing both, which has caused a double effect in the stock market, causing it to go into the negative territory. And all eyes are now on inflation that's probably going to be highest in 40 years, which could prompt higher and more frequent interest rate hikes from the Fed. Because there's an expectation that the inflation number will be at the highest level since 1981 at 8.5%, people are selling off crypto because an increasing rate of inflation, especially the highest it's been in 40 years, means that the Fed will have to be more aggressive in its monetary policy. And in expectation of this, people are selling off crypto to avoid being in a position where they're facing losses if the crypto markets falls down even further due to even further tightening of the US monetary policy. Also, ongoing geopolitical strife also helped prompt the flight to safety. Ukraine said that it expected Russia to launch a huge offensive soon. So when there's such geopolitical instability going on, whereby the whole world is affected due to its effect in energy prices and due to effects of diplomacy, we see that people tend to become more risk averse and they tend to sell off crypto and other riskier assets and move on to bonds and blue chip stocks. So the combination of a tighter monetary policy, increasing bond yields, economic slowdown that affects energy sector, the expectation of further tightening of the monetary policy due to the fact that inflation will hit a 40-year high, and the worsening of the geopolitical situation has caused the stock markets to go down and has caused the cryptocurrency market to go down in an even more amplified effect. And because the prices decreased so drastically and it decreased by such a large amount, we saw nearly $430 million in liquidations in the past 24 hours. And nearly 90% of all liquidations in the past 24 hours came from traders betting that the prices are going to go up. And what this tells us is because the cryptocurrency market was in a mini bull run where the prices kept on going up and up and up from about 36,000 to 46,000, people thought that this trend is going to continue and that the prices would keep going up. So in order to capitalize on this and in order to make a higher profit, they entered leveraged positions whereby they invested more than they actually had in order to get more profits. However, there is a caveat with leveraged positions. If you bet that the price is going to go up and the price subsequently goes down, then you can lose all your money. Think about it. If you invest $100 in a 10 times leverage position, with that $100 you can invest in $1,000 worth of Bitcoin. But now let's say that the price of Bitcoin falls so far that your position is now at $899. You are losing $101 more than what you had invested, which is $100. So you are already in negative territory. What the exchange will do, they will liquidate your position, they will take all your money, your position will be zero, and they will use your money to recuperate any losses. The higher the leverage, the more amplified the effect on its price. So if prices go down and liquidations are as high as almost $500 million, it sends a negative and bearish signal to the market, which causes the price to go down even further. So out of the $430 million, Bitcoin futures lost 156 million, Ether futures 103 million, Solana futures 12 million, and Dogecoin and GMT 16 million. Ethereum developers are now testing Ethereum 2.0 upgrade on Shadow Fork. So the Ethereum Foundation got a step closer to deploying the Ethereum 2.0 and has been using Shadow Forks to make its testnet more closely resemble the Ethereum mainnet. So what a Shadow Fork is basically, it refers to the copying of data from a mainnet network, so the main Ethereum blockchain, to a testnet, so like a beta mainnet, where developers can test features before deploying their work to the main network. And in doing so, Ethereum engineers have made the test environment more closely resemble the mainnet that's processing over 1 billion transactions per day. So they create a testnet which is basically a mini clone of the mainnet in order to test new features, and if everything runs smoothly, then they just release it into the mainnet and they face very little problems. The average block time is 13.8 seconds, which is a major milestone for the Ethereum network, given that Ethereum has been plagued with slow transaction times and high gas fees. If this 13.8 seconds is true, then it's a game changer. So the Ethereum 2.0 upgrade has been in the works for a long time. The first phase, called the Beacon chain, went live on December 1st, 2020. So what the Beacon chain is basically coordinates the new proof of stake consensus protocol, which Ethereum will be. Its validators nodes are recording every transaction that's happening on the main chain right now, creating an exact copy. It runs alongside the main chain as a live beta, and the network tests its stability. Eventually it will replace the main chain in the merge event, which officially shuts down the proof of work mechanism, and then the Beacon chain then becomes the new main chain. So basically all that jibber jabber means that the Beacon chain is at the moment a side network that's connected to the Ethereum network in order to convert it from a proof of work to a proof of stake platform. And once that's perfected, it will replace that main Ethereum network. Finally, 72% of advisors would invest more in crypto if spot ETFs were available. I'm just bringing this up because there was a fourth Bitcoin ETF that was approved a few days ago, and that was done under the 1933 Security Act, which opens up a whole new door for spot ETF approval. This is due to the fact that spot ETFs in the past were denied on the basis that the 1933 Securities Act did not provide enough protections for consumers utilizing them. But now a Bitcoin futures ETF was approved using that law. So there is no way that regulators can use the 1933 law to decline a spot Bitcoin ETF. And I think it will be important to see if Bitcoin spot ETFs will be approved, because this will be a game changer. And the fact that 72% of financial advisors would invest more in crypto if spot ETFs were available means more institutional adoption, which means that there is further chance for an upside in the price of Bitcoin, and by extension a lot of money flowing into the general crypto markets, which could see the markets go above 2.5 trillion. But this is all hope, and it all depends on the US regulators. And that's it for today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and I will see you tomorrow for the next one. Invest wisely, and cheers.